Ernie, looking at the survey for July, has it improved for the San Joaquin Valley?
Our overall leading economic indicator for the San Joaquin Valley was up a bit for the month of July. Now, these are individuals that make the purchasing decisions for their companies in the four-county area. And of course, if it's up for them this month, it's going to be up for the overall economy in the next 3 to 6 months. And I'm expecting slow but positive growth in the next 3 to 6 months for the four-county area. So it was a pretty good report. We'd like to see, of course, better numbers, but they were pretty good for the month of July.
What about jobs for the region? That continues to improve as well.
The job picture was pretty good for the month. We saw the overall reading above growth neutral for the 9th straight month. And of course, that's good news. What we're seeing primarily is growth in the construction. Construction's rebounding, still down from pre-recession levels, but really moving higher. Wholesale trade is doing quite well. Manufacturing is doing well in terms of sales, but not as much on hiring. In fact, we're still seeing losing jobs for the manufacturing sector for the four-county area. However, that number is coming primarily because of increased productivity. In other words, getting more and more output from fewer and fewer workers. And of course, we at the Craig School of Business here at Fresno State, we're tracking that, and it's looking good, but the job picture is certainly not as good as we'd like to see. Although I do expect the unemployment rate, that's unemployment rate for the four-county area, to dip below 10%, by the end of the year for the first time since 2009. So that's a good movement. Of course, a lot of it depends on what goes on or doesn't go on in Washington, and we'll wait and see. But right now, moving forward, things are looking much better.
While the agriculture is strong for this region, what's the impact?
Well, certainly ag and those businesses linked to agriculture have done very well. It's softened a bit, Cindy, and what we're seeing, of course, the global economy is slowing down, and that's being telegraphed to the businesses in the four-county, the San Joaquin Valley, the four-county area. And that's one of the negatives that coming out of the July report. Connected to agriculture, a little softer this year than a year ago, but it's still positive. And of course, that's good news, but export number was down dramatically. That's where we're seeing some softness in the international markets. Of course, we'll have to wait and see, but that's one of the negatives coming out of the July report is exports, and also connected to agriculture. As I said before, the area's down about 17,000 jobs from pre-recession levels. Not going to get all those jobs back anytime soon, but we're getting them back gradually. And the unemployment rate, as I said, will fall below 10% by the end of the year. And that's, of course, a very big positive for the Fresno economy.
What else about the San Joaquin Valley region?
Cindy, it's an economy that really got hit much more heavily by the national recession, and now it's bouncing back, but still not back to, of course, pre-recession levels. We're seeing, of course, inflationary pressures at the wholesale level coming down. Our inflation gauge for the San Joaquin Valley down, still above growth neutral, so we're seeing inflation very modest. What that's going to mean for the San Joaquin Valley and for California, and for that matter, the nation, is that the Federal Reserve has more flexibility to keep their foot, the pedal to the metal, so to speak. In other words, this inflationary, cheapened money policy that they pursued for several years now, record a cheap dollar, at least record monetary stimulation, I should say, over the last several years. They're going to continue that, although I do expect when the Fed meets in September the 17th and 18th, I expect them to begin tapering, as it's called, QE3, meaning the $85 billion bond purchases that we are seeing each month. Those are going to come down a bit, I think, beginning in the September meeting. Of course, that's not entirely bad. I think the policy has not been as stimulative as most folks think. Confidence was down for the month, Cindy, and that's not good. With interest rates rising a bit, and of course there's this belief, expectation that it's going to hurt the housing sector. I don't think so. We are going to see higher mortgage rates, And that's going to temper the growth, but it's tempering the growth, not pulling the sector down. Housing and residential housing and construction overall is likely to continue. On the federal side, though, not as good news. The sequestration, the impacts are growing, at least according to the businesses that we're surveying. Now, still only about 5% say significant negative impacts right now. 5%, of course, is not that significant, but it's still the negative impacts are growing. About 10% of the businesses reported only modest impacts. The remaining said no impacts. So most companies continue to say no impacts, but those that are detecting impacts, it is growing each month. And of course, that's a big factor going forward, and how the Congress and the President deal with that in the coming months is going to be very important for the San Joaquin Valley, and it's going to be important for California and of course the nation as we move forward. Overall, the July report tells us about what the June report says, and that's the San Joaquin Valley economy is going to continue to expand over the next 3 to 6 months. It's not going to add as many jobs as we'd like to see, but it's going to continue to add jobs. The unemployment rate is going to continue to move lower, and that's, of course, good news.